Happy Tuesday. We are back with another episode of Go Fund Yourself. And although they almost look the same, I think you can tell that my friend Patrick here is not Ceara. How you doing, Patrick?
I'm doing great. It's good to be here.
Awesome. Big fan of the new background. Patrick moved over the weekend, and I was lucky enough to help. So excited to see you set up shop in the new office.
Yep, slowly getting set up. Super excited to have the new space. One thing I may never have is a strobe light in my office the way you do. But otherwise, the ingredients are coming together.
Hey, those are just one Amazon purchase away, my man. I don't know if I've shown the police lights on a stream before. Maybe I'll do it some other day. But anyways, we got an action-packed show today. We are talking a lot actually about just global movements, what different organizations are doing both abroad and then a few domestically. We're going to talk a little bit about Bybit and some stuff they're doing in Cyprus. We'll talk, as we can't avoid it, about BlackRock and their spot Bitcoin ETF and what that means. We'll talk a little bit about OKX, Near Foundation, and if we have time, we'll talk about taxation, this taxation situation in Japan, and lastly, HSBC and what they're doing in different areas of the world. So we've got lots to talk about. Patrick obviously has a ton of contributions to make, as always, and super excited to dig into it. Quick shout out to Chainlink for the merch today. It felt like a long sleeve shirt day, so here we are. I don't know, are you repping any merch today, Patrick?
No, long sleeve, but no branding. By the way, that was the best swag at ETH Denver this year, was that Chainlink swag.
Isn't it amazing? Like just a long sleeve tee, and it's like super soft and perfectly fitted. I'm a big fan. So thanks to Chainlink. I still am a little bit jealous of all the Chainlink socks you have. But one of these days, maybe I'll add some to my collection. All right, so let's fucking go. Right, we are back. I am on Spaces. Patrick, check your inbox on Twitter. There should be a link in there. If not, just go to the Realm Blockchain Labs Twitter page and you'll see the space on there. You can join and we'll get you up to speed. But in the meantime, I will introduce the first topic while Patrick is getting going. But it's Tuesday. It's Taco Tuesday. At least where I live in Miami. Every day is Taco Day, but I'm a big fan of Taco Tuesday. So we're going to call today Taco Tuesday. We're going to start by talking about an interesting platform in Bybit. And, oh, nice. Patrick is there on Twitter Spaces now. You just need to request to speak, brother, if you haven't. And then Senior Producer will hook us up and make sure you can talk, and then we'll be good to go. But Bybit is an interesting one. You're gonna want to turn down your volume on your phone, Patrick, please. Bybit's an interesting one. They've, Huobi, KuCoin, Binance, of course, many of the other major exchanges have had some interesting times over the last couple of years. Some of them, senior executive challenges, some of them regulatory challenges, or domicile location challenges in China and other places. But Bybit has just been slowly kind of climbing the rankings, building trust as a centralized exchange. And now they are continuing to expand by acquiring operating licenses in Cyprus. And so we've talked about Cyprus a little bit in the past, how Cyprus used to be a bit of a safe haven for finance, especially for Europeans. It was a great place for people to offshore assets and corporations over there. That since has changed a little bit. Cyprus isn't the kind of offshore protective nation that it once was, but it's still very open and eager to support crypto platforms and projects. So we are seeing it's not quite like Malta or places like that quite yet, but Cyprus is really working to embrace blockchain. Do you think that we're going to see more of this in the short term, Patrick, or are a lot of groups likely waiting for major jurisdictions to come out with their regulatory posture?
Yeah, I mean, it's a great question. I think we have been seeing more of it over the last, several months. Gemini is another example of, moving offshore. I don't think it was Cyprus, but so I wouldn't be surprised if we continue to see companies doing this. But to your point, I think this is fun. This is an intermediate step, and ultimately, we're going to need to have the type of clarity to set up these types of exchanges and offer these types of financial products and services in major jurisdictions. And this is kind of like, these are steps you can take to be able to compete in the kind of intermediate period before those major jurisdictions kind of get their house in order. So I wouldn't be surprised if we see more of this, but I think it is an intermediate step, and we should be thinking about what's necessary to have these types of companies operate in some of the major jurisdictions.
Yeah, I mean, Binance just pulled out of Cyprus. Now, there's speculation as to why that was. Maybe they were encouraged strongly to pull out of Cyprus for different reasons, but now they said they want to focus on larger markets, and then we're seeing the opposite from Bybit. We're seeing Bybit move into Cyprus, which is kind of interesting. I think something I've been thinking about and talking about a lot in the last little bit, and Patrick, you and I talk about this quite a bit privately, of course, but one of the major challenges with proliferation of regulation is going to be de facto and one of the major value accrual or value propositions of blockchain is that it's almost instantly global. You instantly have access to a protocol from anywhere in the world. The challenge is if every jurisdiction continues down the path that they're going down, where they're all going to be nuanced regulations, we're going to have tens or potentially hundreds of different structures to follow and registrations to follow and fees, I'm sure, to pay to every regulator globally. It's going to create a very challenging compliance moat. It's going to be orders of magnitude more expensive to operate in all of these jurisdictions. And I think what we're going to see is probably what we started to see with centralized exchanges already, where it's not going to be globally accessible to begin with once regulation comes in. What you're going to do is you're going to have specific jurisdictions that you're licensed to operate in, and large entities will have to continuously evolve and apply in more and more locations. I know you wrote a piece, Patrick, shameless plug for your Substack. You wrote a piece on barriers to entry and innovation. How do you think this type of regulatory movement globally will impact the competitive nature, the innovative nature of blockchain?
Yeah, that's actually a really interesting question. I guess it's not clear. I think right now, well, it's very interesting. I mean, maybe we could think of it as like kind of bimodal. Right now, there are certain jurisdictions where the barriers to entry are extremely high. It's very hard to get set up in places like the US for these types of services. But then there are other places like BVI, maybe Cyprus, where the cost of getting set up is quite low. And because the barriers are so low there, innovation is happening more quickly. And this is the trade-off that I touch on in that piece that you mentioned. If barriers to entry are too high, then you're going to be restricting innovation too much. And if they're too low, on the other hand, you could also have, in a sense, too much innovation, because if the barriers to entry are too low, then the cost of getting started is so low that you can see more incidents of lower quality projects. And so, I think it's a very interesting question right now. My guess is, yeah.
Time out, just one sec. You're muted on Spaces. Just leave it unmuted. People on Spaces are probably like, "What is going on? Why can't we hear anything?" But yeah, if you just want to press unmute on your Spaces, then you should be good to go. There you go. All right, sorry to interrupt you. Keep going.
Yeah, no worries. I think my phone went to sleep. I think that's what it was. What I was saying is, my guess is that there's right now the barriers to entry, they're kind of bimodal. In major jurisdictions like the US, the barriers to entry are very high. The costs to enter the market are very high. There's all these compliance steps that are extremely costly. There's a lot of ambiguity as well. I mean, even people with deep pockets can't always figure out how to get established in these major jurisdictions. So the barriers to entry are very significant in some jurisdictions. Then you also have some other jurisdictions, BVI, Cyprus, where the costs to entry are quite low. And So my guess is you kind of see this bimodal distribution in terms of what the cost to enter the markets are as a function of these jurisdictions. And there are some really interesting trade-offs. And so if the barriers to entry are too low, then you can kind of get a lot of sloppier projects that have a higher risk of failure. If they're too high, then you're essentially stifling innovation. And that's what's happening in these major jurisdictions like the US. And so, maybe these, I guess if we want to think about the trajectory of the global regulatory environment, maybe we want to think of these kind of costs to enter the market as converging to like a unimodal distribution. And so I think, and then that will allow, then innovation will be able to take off in these major jurisdictions, but then also in some of these other jurisdictions, it may be a little bit harder to push through low quality projects or things that are fraudulent or so forth and so forth. So my guess is we're kind of, right now we have a bimodal, barrier to entry globally, and then we're going to converge on something kind of in the middle of that.
In the middle somewhere, ideally, yeah. I mean, I'd love to see unified global standards. Good luck getting all the countries of the world to agree on anything.
Yeah.
Go ahead.
It might be interesting for some type of international organization, almost like an SRO or something, to try to kind of spell out what are the minimum set of compliance steps you need to take to be compliant in the majority of jurisdictions or something like that. I think there's scope for an organization like that to provide a lot of value.
Yeah, absolutely. I mean, another kind of version of how we're seeing maybe barriers to entry be brought down slightly or maybe increased. I think the jury's still out on this one, but there's been a lot of splash and excitement on BlackRock's spot Bitcoin ETF. Remember, well, maybe you won't remember, Patrick, but yesterday on the show, we made a distinction between leveraged futures Bitcoin ETF and a spot ETF, and they are in fact quite different. What a lot of people are talking about now is that Bernstein Research came out and said Grayscale has kind of always been the dominant participation or dominant asset manager, kind of trying to find ways to get Bitcoin to become mainstream and to be a major participant in the space. And now BlackRock, the largest asset manager in the world, has come out and said, yeah, we're actually going to compete, and let's see what happens. So what are your thoughts on this? I've asked a few of our guests over the last little bit kind of what they think about incumbent TradFi institutions like BlackRock. Love them or hate them, doesn't much matter, but what does that mean for the space? How do you feel about it?
Yeah, I mean, it's a double-edged sword. I mean, I think it's good to have the volume come in, to have these BlackRock operates at scale, obviously. Having them kind of publicly endorse some of these markets, I think, is huge. On the other hand, I don't like to see major TradFi incumbents getting kind of having a clearer path to approval for these types of products than newcomers. I'm not necessarily surprised. They have more resources. They're more connected with the regulatory agencies. They have probably better lawyers. I mean, I'm not necessarily surprised that BlackRock has an easier time than Grayscale. But I wish. I mean, on the bright side, maybe Grayscale can learn some things from how BlackRock has approached their filing. What I will say though, one other thing, actually, you mentioned just right at the beginning of this question, the distinction between the leveraged futures and the spot ETF. I'm curious to hear your take on why the leveraged futures are easier to get approval for.
I'm muted because I've got one of my kids screaming in the background. Apologies for that. Not sure. I'm sure on Twitter Spaces, I didn't mute Twitter, but I'm sure you can hear it on there. Anyways, yeah, I mean, I think this is, I've been saying this for a while. It is a double-edged sword. It's good because on one hand, like you said, if and when BlackRock is successful with the spot ETF, that creates a roadmap or a path that should be replicable. The operative word there being should be. It should be replicable. We'll have to wait and see if that actually happens. They do have incredible lobby power, BlackRock. They have a lot of influence, deep relationships spanning decades with regulators. So I understand why regulators may be slightly more willing and open to deal with, the devil they know versus the devil they don't, so to speak. All of that being said, though, I think there's a lot of scrutiny, a lot of public pressure right now on starting to embrace blockchain technology in America and many other jurisdictions. And I think we're going to see, hopefully, the path paved slightly by some of these incumbents, making it possible for others to follow suit. Let's hope that's the case. You asked a question at the end, but I was distracted trying to mute myself. What was your question?
I was asking about the leverage futures approval versus the spot approval, but actually just real quick on the point that you were just making, I think because that's going to be happening, because these incumbents have kind of an easier job of getting things through in Washington or getting things through with regulators. I think it's even more important that we find a way for people who have experience in Web3 and people who understand, really the kind of novel value add that this technology provides, helping to shape the frontier along with those TradFi incumbents. Because my guess is the TradFi incumbents are going to kind of miss a lot of the subtleties and the nuances in terms of what the new efficiencies facilitated by Web3 technologies are. So I think, although I'm happy to see some of these TradFi players making progress, I think it's going to be really important for people with a lot of experience in Web3 like us to help kind of shape that frontier.
Yeah, I mean, again, I've been no stranger to commenting on this, but TradFi, especially publicly traded entities, which are most of the large ones we're talking about, a fiduciary responsibility to maximize shareholder value, and so their goal is to not lose market share, and in fact increase revenues. So they have a very specific path they're trying to pursue. Many of us are building with the antithesis of a philosophy where we don't want to have all of this rent-seeking middlemen type. We don't want to have massive bureaucracies with massive layers and many layers of cost and inefficiency and so on. There's some major advantages of TradFi incumbents. Of course, they have massive client networks. They have incredible influence. They have infrastructure that most of us can only dream of. But on the other hand, I think we're kind of coming at the same problem with two different perspectives. And so, to your point, I'm also highly encouraging people to get involved. Blockchain Association, shameless plug, we're members, of course, of the Blockchain Association, but they're doing a lot of work with lobby, with making sure that industry's comments and thoughts are heard right now as they're marking up bills coming out of committee and different things in the House. And I believe in the Senate. But nonetheless, I think we all have a responsibility. If we want to see this through, and if we expect to have meaningful societal benefit from this, we have to find, again, a little bit of a middle ground between rah-rah DeFi, cut out all the middlemen, and TradFi's, rent-seeking, profit protection type structures. And so hopefully we can come to that point. Quickly, I'll touch on the spot ETF versus the leveraged ETF. Spot ETF brings with it a few more nuances, I think, in terms of asset custody, where it's being purchased, fees, time delays, settlement, clearing, all of that stuff. Whereas a leveraged futures ETF is effectively just numbers on a screen. So it's kind of like BBook foreign exchange trading. Versus real market participation. So although it's exciting, the first leveraged ETF has now been approved in the US, but it's not quite what we've all been waiting for in terms of will it have a meaningful impact on actual Bitcoin in circulation and Bitcoin price. And a spot ETF will have a much more significant impact on that because it's holding assets one-to-one, whereas a leveraged futures ETF likely isn't holding the assets one-to-one.
I see, and also the leveraged futures themselves are probably under the purview of the CFTC.
I would assume so. Again, I don't know a ton of the nuance in that recent leveraged futures one. We just reported on it. I think yesterday was the first day we started talking about it. So we'll see. I mean, there's another leverage futures ETF from HSBC, I believe, in Hong Kong or Singapore, one of the two, that was announced and it started trading yesterday also. So I think we're seeing this. I mean, futures ETFs, there's been a few of them in Canada and in Europe and others for both Bitcoin and ETH for a while. So it's not like this is the first one ever, but a major market having a Bitcoin spot ETF will definitely move the needle. So that's exciting. I think we're getting closer, right? Seeing an approval of a leverage futures one is 80% of the way to see an approval, in my opinion, of the spot ETF. So that's exciting. Okay, we've spent a long time talking about the first couple of topics. Maybe let's move on to NEAR. We haven't talked a ton about NEAR on the show. NEAR is doing a lot of really interesting work. We've been close with the foundation and founding team for a long time, but we haven't talked a whole heck of a lot about them. So they just announced partnership with Alibaba Cloud. And Alibaba Cloud has really been expanding aggressively. They partnered with Avalanche, they partnered with other L2s, and now obviously NEAR to help build out and expand infrastructure and node deployment and all of these things, especially to Asian markets and Asian users. So this is really exciting. I think, well, before I get too deep on my thoughts, how do you feel about this? What do you think about large centralized cloud and infrastructure providers from Web 2 dipping their toe? Maybe they're no longer dipping their toe. They're starting to make meaningful entrance into the market. So what are your thoughts on that?
Yeah, it's a very interesting question. I mean, my sense is this essentially analogous to what, the partnership that Avalanche announced with AWS a few months ago?
Avalanche also announced one with Alibaba Cloud and others, I think, too. So it's it's very analogous. Yeah.
Yeah. I mean, my sense is, in terms of just the Web3 hosting, do we want to run a bunch of validator nodes on something like AWS? I mean, obviously, it does make it easier for the network. If you have a large fraction of your validators running on something like AWS, and then you get an OFAC request, or you get some type of enforcement request from a government, it's much easier to shut it down, obviously, if you can just go straight to Amazon and say shut it down. That being said, I think my sense is, and I don't want to step out of my area of expertise here, but to the extent I've looked at it, it's actually easier to shut down validators or miners than people think anyway. So if that's true, then I'm not sure that this really is adding a new risk. Maybe it makes it kind of slightly easier for some of these services to get shut down. But if you really wanted to shut them down, you could do it anyway without that kind of heavy interplay with the Web 2 service providers.
Yeah, I'm probably not quite as positive on this one as you. We've built node infrastructure for many blockchains, but we do all of it in our own data centers. We have racks all over the world and many servers globally. And we've done that for this exact reason. I think in the sense that, having a single point of failure with one single cloud provider, if they change their pricing structure, or if they change, there's a lot of different things that can impact how your business operates when you're partnered with cloud. Now, there's some obvious advantages. You can scale quickly. There's not a lot of upfront hardware cost, which we spent millions on. So, I mean, there's some advantages. I think it's a bit of a double-edged sword. We've used that phrase a few times today, but we're one of the biggest challenges with blockchain technology still is that the user experience leaves a lot to be desired. It can be confusing, it can be complex and complicated. The simpler we can make that, that's obviously an advantage. But again, we don't want to have concentrated single point of failure. To your point, I think there are ways to shut down nodes and validators via your internet service providers, or via, if they were able to somehow get in contact with and control the data centers that you're in. I think it's to draw to draw a parallel or use a metaphor for that, it'd be kind of like saying, at least from my perspective, it'd be kind of like saying there's no point in ever locking your door, because if somebody wants to break in, they're just going to break in. And the answer is, well, maybe. I actually said that exact word to you the other day. Whatever. I actually said that exact phrase to you the other day, on Sunday. But I mean, I kind of feel that way. Like it's a hell of a lot easier if you have an AWS or an Alibaba or a Google Cloud for the government, who already has a deep and multifaceted relationship with those institutions. If the government jumps or says jump, those institutions don't have much of a choice. They've got too much to lose. Whereas, all these different groupings and clusters of data centers globally, there's a little bit more friction, I think, for governments, especially foreign governments, to come in and demand certain things from those parties. So
that's fair. Like I said, it makes the risk kind of incrementally higher of getting shut down by some centralized authority, but it doesn't introduce a new risk, because if someone, like you said, if someone really wanted to, they could find over 50% of the validators and subpoena them, and it's actually probably not even that hard to do that. So I think people are a little bit living in an illusion about Ethereum and Bitcoin can't be shut down. I think they could be. It's unlikely, but I think there are major governments have the power to do that if they want anyway.
Yeah, Bitcoin I think might be tough to shut down, but Ethereum for sure. More than 50% of the validators, at least the claim is, are in the US, and so for Ethereum. So I mean, imagine all of those entities and institutions and individuals got cease and desist or some sort of notice that they can no longer validate. I mean, if you live in America and American regulators are telling you not to do something, you don't really have a choice. You kind of gotta play ball. Okay, one final topic before we move on for the day. Another part, I think, of we talk a lot about the crypto arms race and how regulation is a bit of an arms race right now. Different jurisdictions globally are trying to figure out, how can we remain competitive or even gain an advantage over other jurisdictions by approaching the regulatory thing in a unique way. Another piece of that is that we haven't talked a ton about, that I think will become its own arms race in time, is taxation and how these assets are taxed from one jurisdiction to another. And Japan has just released some corporate tax guidelines that are now including some nuance for cryptocurrencies and digital assets and different things. And they're making it more in line with many other longer term investment structures. I mean, we've got a lot of this already in the United States and Canada and many other places, but I think this is also going to be an area where countries can compete in a meaningful way. I know Portugal, as an example, had it was tax-free for the longest time on any crypto assets, period. And so that attracted a huge and beautifully flourishing blockchain technology development ecosystem in the country. And they brought a lot of people. They had a lot of immigration, high income earners, high intellectual quality, people that you want in a country. And so I think we're going to see a lot more of this. How do you feel about taxation? Like you live in the US just like I do. So obviously the writing's kind of on the wall and there's not much we can do about it. But what are your thoughts on this? Do you think this is an area that countries can stand out?
Yeah, I actually didn't learn about this till today, and I actually am really excited about it. I mean, tax policy is one of the major levers that governments have to incentivize certain types of behavior, and specifically certain types of investments and certain types of also consumer behavior, certain types of capital investments. So in the U.S., we have all types of tax breaks for electric vehicles or non-fossil fuel technology. So the government can use the tax policy to incentivize certain types of investment in consumer behavior. And so the fact that Japan is doing this to incentivize, issuing crypto, I think is a good sign. I think it's the type of thing we need to see. We want to see governments who are willing to pull some of these levers to incentivize innovation in Web3.
Absolutely. I think it's great. I'm excited to see what happens. I think it's again, this is another one of those circumstances where it's kind of on all of us. If we want to see change, be a part of it, to not sound too cliche. Anyways, we are up against time for today. So Patrick, as always, go ahead.
One more comment. You mentioned we said double-edged sword a couple of times. I'll just point out, economists think everything is a double-edged sword because economists think about everything in terms of trade-offs. So there's always, well, you get a little this way, you get a little that way. So you're going to hear a lot of double-edged swords from me.
We'll hear a heck of a lot more of that over time. All right, brother. Thank you very much. For everybody that's listening, we are a live show Monday to Friday, 12:30 p.m. Eastern. Like, share, subscribe, help us share the love. We're out here trying to dispel some FUD and make sure people don't get too much FOMO, can take an objective look at what you're hearing and reading in the news, and hopefully keep you abreast of what's going on. With that today, Patrick, thank you. And I say to you, go FUD yourself.